Michael Burry shutting down his hedge fund and freaking out. This, ladies and gentlemen, this is going to blow your mind. What's going on here?
So based on everything I've read, the man shuts his hedge fund. I have no idea what his returns are. He was obviously part of a movie and part of a trade that the hedge fund I was at made a lot of money on. A lot of people did, because mathematically it made no sense, meaning the way the housing market was back in 2007. So it wasn't some genius trade. It was something, and if you watch the movie, where a lot of people were out there saying, when is this going to happen? It's got to happen at some point. But he decides to close his hedge fund, and he goes and starts a Substack and immediately gets 30,000 plus subscribers, charging $400 a year for the Substack. So man's got 12 million in revenue coming right in the door right off the bat. Now, he sells something that people love, because people love bears. There are so many people out there that believe the world's going to end tomorrow. And it's easy to feed them stuff. And he's been all over the press over the last week. The reason I bring him up for this is that book, A Whole New Mind, specifically says that if we're leaving a world where you can't do math on things. So let's go back to GDP. Floating around the universe today is the leading economic indicators related to the coincident indicators. This can't last forever. We'll have a recession. Well, we are in a recession in the old industrial world. There's no doubt about it. Housing's horrible. Commercial real estate's horrible. Autos stink right now. We have been in a recession for probably 3 years. We're seeing small businesses go out. Job losses are happening in the industrial economy. Now they're starting to happen in the software. We're definitely in a recession in some measurement, but that's a mathematical thing. At the same time, nominal GDP is growing at 5%. At the same time, we still have all of these innovations going. I don't know if there's a measurement that will ever come. And that's why certain places in the world have happiness measurements. Because if poverty is going down, even if the poverty line in Michael Green's thing continues to go higher, which is adding pressure to the way people feel, I think we are getting into a world where it's very, very hard to come up with a measurement that will be defined. So that's why we talk about these things. We talk about the job losses. I'll go into data after data on income and all these things. But for people who's listening, you just take it day by day, because one thing you said, and this is the truth about innovation, it's gradual. There is no AI moment where it just happens. This is a gradual thing. And for people that are trying to trade, make money, I believe we are at a major inflection point where we are going to put brains into machines, and that build out, not just data centers, which are necessary. This is not a bubble. This is a necessity, which is government backed. The Genesis mission basically makes it too big to fail for AI, because we need these things for military dominance. We need it for everything. Go with government policy and get involved in it. And rather than focus on the true measurement, I think if you're focusing on old measurements, you're going to make a mistake and you're going to follow the people that are bearish. If you follow on the new stuff that Elon Musk is talking about, you don't have to believe in his timeline, but this is the smartest entrepreneur in the world. And I just wrote a paper in Substack this week that was all about, if Warren Buffett said what Elon Musk said, the market would be up. Nobody trusts Elon Musk. Nobody believes him, but he's the most successful innovator financially of our time.
Removing people from the economy, which again is very controversial politically, but it does bring down housing prices. It does reduce demand, all this kind of stuff, right? So the deportation, et cetera, very deflationary. If you go and you look at a bunch of these things, automation inside of factories, deflationary, right? You just keep going through all of these components as to to upgrade us, to modernize us, to get the economy running at 4 or 5% GDP growth. Everything is deflationary. The Fed policy, while everyone is yelling and screaming about inflation, what if the administration and the economists kind of in their world are actually so worried about deflation that they are trying to race ahead and get some sort of inflationary aspect into the economy as a balancing act? Now, again, I don't know if I'm a big believer of everyone's always playing 4D chess, right? Sometimes things just kind of fall in place, but it does feel like we probably have more deflationary forces at play in the US economy than people recognize or talk about publicly. And so in a way, you have to have easy monetary policy, or you actually end up in a very weird, bad place without lower rates and, kind of capital coming into the economy. Is that a fair way to look at it?
Yeah. And what's funny about going down this path and thinking about it is I listened to an interview with Elon Musk that came out over the weekend.
This is the one with the guy, I think his name is Nikhil.
Exactly.
Right? Okay. All right. I haven't listened to it yet.
Okay. It's a 2-hour interview. I love listening to Elon Musk, but like when he's on the All In podcast, I get bored very quickly because it's like a joke fest. This wasn't a joke fest because he's kind of a kid in a big way. Like he'll
it's
joke
like immature,
exactly.
humor, right?
Yeah.
Like so he'll tell a fart joke, and you're like, dude, you're the richest guy in the world.
And he's doing that, but they do the interview inside a Tesla plant.
Okay.
And it gets very philosophical. So the person asking the questions is Indian, I believe. And he's talking about Indian entrepreneurs and it's geared towards that audience. But it gets very philosophical on a lot of points. And so something you mentioned, which I just want to bring up, because he talks about the deflationary nature and he defines it that in the next 3 years, we will get to a point where the deflation will hit. And it'll be measured in a way where you'll still have GDP growing, but money supply won't actually need to be growing. It gets into this whole thing of deflationary pressures relative to money supply.
It's kind of, it almost sounds like a technologist's view on economics.
Exactly.
Yeah.
And to me, it's very important. I listen to these because I want to hear his view on things. Now, there's like 10 to 15 provocative statements, which I'm going to go through in detail on my video this weekend because I'm like, this is good stuff. But here's a phrase, and I like to pick lines that if you think about them, they're deeper. And I'll give it to you because it fits what you said. He said, work will be optional.
Mm-hmm.
So I like if we sat here and we went through, let's think about that. He's not saying all jobs will be lost. He's saying work will be optional.
Mm-hmm.
That is what I believe with AI. That is why my goal for the next few years is to help people start to use it, especially younger people, and realize that it's going to be an empowerment thing to be able to build things with it. His point is the deflation is going to come. Robots will be able to make robots and they'll be able to make everything that we need to do the stuff. The energy costs will go down. He talks about something Google's talked about too. So if people haven't heard this, the reason the energy problem will be resolved, the data centers will eventually be in space, collecting through solar panels. Google's talked about it. He's talked about it. Google's talking about launching their first one in 3 years. The amount of energy that's in space with the cooling makes it natural for a data center if they can do this. So why does Elon Musk have Starlink? Why does he have SpaceX? Why does he have Tesla? Why does he have X, the cross-section of all of these things? So the Elon Musk thing gets into this concept of the deflation is coming, but to go back to what Jeff Booth has said, this is the natural course of governments, is they have to cause inflation to some degree. And part of that is by making asset prices go higher at the top end, and then at the bottom end, giving transfer payments for people who need money. So if you're going to do both of those things, okay, we can't let stocks fall, and at the same point, we're going to give money to people that are not participating in this. That's why you get this inflationary pressure side to offset the deflationary pressures which come from innovation.
Yeah.
And that's what Elon Musk was talking about.
And Bitcoin obviously has been very volatile. We've been out the game for 2 weeks, so I feel like we got a lot to talk about here. But Bitcoin had dropped all the way down to 80,000, which is just under a $40,000 drop from the previous all-time high. But it's come back. We're now kind of 92, 93,000, and I feel like optimism. People are like, "Hey, was that the bottom?" It kind of prices the healer of all bad ideas. But we also are seeing Wall Street not care about the price drop. Like there are announcements after announcement after announcement of Wall Street still wanting to adopt this asset, participate in this industry. How do you read price action and the continued Wall Street adoption of Bitcoin?
I'm feeling this is a pattern. I come back from Maine, we don't see each other for a period of time, and we dive right into the pool. There's no foreplay, there's no nothing. So I hope Thanksgiving was good for you and your family. It was good for mine. Okay, Bitcoin. I think, again, and we talked about this during the month, and I don't want to minimize the drop, but November was a historic month for the stock market as well. People may not know that, but I spent a good portion of my career on factors and growth, value are the ones people know, but momentum. And when you take factors, especially a momentum factor, which we've talked about on here before, Bitcoin is very much correlated to momentum, but it's the long side of momentum. So whenever people hear factors, think of it as the top 10% of some factor relative to the bottom 10%. And in this case, The long side of momentum during the month of November relative to small cap stocks, which allows you to kind of normalize the volatility, similar type moving things, had its worst drop since the great financial crisis. So you're talking about a sharp fall. Now, Bitcoin fell as well. That wasn't the catalyst, but I think what people are going to have to get used to is this relationship between the retail part of the stock market and Bitcoin. Because I think the energy for Bitcoin comes from the people who have followed you for a long time. It comes from those people. It doesn't come from hedge funds. If anything, I think hedge funds are so skeptical that whenever they see a simple moving average breakdown and they want to short something, Bitcoin gets a very crowded short. So if you take the hedge fund and the retail unwinds, you add that into what we were going through anyway, which was consistent selling from OGs, I think it made sense for us to go down. And we did talk, and I remember saying we could go down to 80. It wouldn't be a problem. We did. I think the bounce back has been quite impressive, but it's also coincided with the stock market going higher. One of the things I said, which I feel very strongly about, based on my views on next year in the stock market, based on my views on where AI is, there were a lot of AI bubble fears in the month of November. A lot of them were related to OpenAI, to NVIDIA, to CoreWeave, to Oracle. There was a whole bunch of things going on where people were freaking out. I think people have to get back to the relationship of Bitcoin to AI. Now, where we're finished at this 92, 93, we're unchanged for the year. So I always get back to this thing with Bitcoin that I believe in. I don't worry about where it's going to be over the course of the next 20 years. I don't worry about the network effects. I don't worry about it being the only thing that doesn't have a moat. But the most important thing for people to leave from me today and this weekend, which I will cover extensively on my YouTube, we are at a major inflection point that to me is very similar to what ChatGPT did. So we're ending LLMs. And the reason this is important for Bitcoin from a where the money going type thing, the fiat assets are dominated by 7-8 companies in terms of their market cap. They're all in some way associated with AI, but they're all associated with coding. This is the year that vibe coding, which everyone now knows is a word, was a ChatGPT moment. And part of the factor unwind, part of the thing that has hurt Bitcoin all year has been this move away from growth. And when I talked about this a couple of weeks ago, there was the negative comments were about, oh, now Jordi's bearish on tech and blah, blah. I am so bullish on AI, but I do believe that we are entering a new phase of AI, which has nothing to do with the textual and software side. It has to do with the physical AI side. And I think it started, Bitcoin's going to benefit next year relative to growth stocks, but this year it got caught up in the growth.
What seems to be happening right now is there's obviously the lack of trust in the institutions and kind of all the stuff that's very well documented. You have a degradation from a socioeconomic standpoint of a lot of people. So now people are saying, wait a minute, the existing legacy institutions, systems, people, etc., is not working. I need something new. Some people go look for political solutions. Some people go look for religious solutions. Some look for technological solutions. But you have Bitcoin and kind of the rise of, let's just call it financial infrastructure in a digital age. All of that is coming to head at the same time AI and robotics. So again, kind of automation, right? I actually think the financial plumbing and infrastructure is automation to a degree. So you have this big automation trend meeting Kevin Hassett or whoever the next monetary, kind of chief will be, who's saying, wait, we have to go towards easy monetary policy. And to me, that really feels like as these things come together, that's the thing that pushes the stock market significantly higher. It's not just AI, because just AI alone without the macro backdrop, you'll get gains as we've gotten, but I don't think that you're going to get the type of gains that people are promising from the boom, right? It's kind of like there's an AI appreciation, which is nice, but people want the boom, right? They want the, how do we go up 50% over, 18 to 24 months? And it's almost like the multiple trends coming together really is what is necessary to do that. Do you agree with that?
Yeah, it's an interesting way to put it. And let me take some of the pieces you mentioned. Let me take Kevin Hassett and directly connect him to Mamdani.
Okay.
So the Trump administration, Republicans, investment believe that if they lower rates, that will help bring affordability back. That'll help the people that have been suffering the most. On the other side, you have voters voting for Mamdani, who's promising free stuff or something. You might disagree on the politics involved, but I think at the end of the day, they're kind of meeting in the same place, which is we have a lot of people that are fitting into the Michael Green article of where's that poverty line now? Do people at $100,000, are they at poverty? Clearly, they're not at poverty, but his argument on how difficult it is to live life at this point is directly related to the macro trends you're talking about in AI. It's something I fundamentally believe in, is that the concentration of the Mag 7 don't exist without the K-shaped economy. That group is causing the K-shaped economy. We talk often with people about the job market. ADP came out this week. We don't really have payroll numbers. They're on some coming back to market. But ADP,
they weren't counting when the government was shut down.
I don't know if you saw the guts of the ADP number, but there's two things that to me are interesting. Number one, 6 of the last 7 months, the ADP release has had negative jobs for small businesses. So go back to the K-shape. There's a lot of businesses, small businesses that are not hiring and firing. But the number for November alone was minus 120,000. Now, to define a small business, that is 0 to 49 employees. That's a lot of businesses that probably went out of business. And that's what AI is doing to the economy and will continue to do. The same way that Amazon disrupted the retail mall names and put the pressure on this. Because rates are high and not coming down fast enough, Donald Trump is correct that this is a problem. On the flip side, you have AI that's also disrupting and causing small businesses that can't compete with the behemoths who have AI and are kind of disrupting all of this. So you've reached a point that, on your point, these macro forces, they're all coming together. And that is why and I mean, I'm getting into a lot of things that we could double click on, but the Genesis mission is so important because they don't have a choice. They have to accelerate AI because on the other macro force is this race against China for AI dominance. So when people listen to this podcast, and I've had a lot of people on the hedge fund side that have gradually migrated here because we talk about a lot of topics that are important. We approach them from a different perspective because you're coming from a different angle. We meet at Bitcoin. I think for people listening, one of the hallmarks of what you said, on the one side, the financial digitization that's happening, the guardrails that are going up, are directly related to all of the macro forces, whether it's the AI race with China, whether it's the job losses that are happening, the K-shaped economy, they're all linked together. The problem is for most people, and what I don't think they fully grasp, AI is the most important force now of those two. And I also believe it's the solution down the road.